Hey everyone, welcome and welcome back to my channel once again. This is your friend Abhishek, but not a financial advisor. And it's been a long time since I posted any video, more than 3 weeks. And this is because my parents are here in Germany and we are traveling around. And if you can see the background, this amazing background, this is not a wallpaper, it's a real background. So we are in beautiful Grindelwald in Switzerland. Yes, so we just had 5 to 6 minutes here to chill around, so I just thought that let me just pick up this camera and record one quick session for you guys to give you guys a stock market update, because I read few reports last week and I wanted to make a quick video last week, but like I said, I didn't have time. But now I thought that okay, let's record this video and keep it short and just give you guys all the important updates what are important for the coming weeks, and that could affect the stock market, and the market would be and could be highly volatile. So this is the article which I came across, and it has all the important information, and I will read for you guys. So okay, I don't have my laptop with me, of course I'm on vacation, so I just have my phone, so I will just read out to you guys. So it says that of course last week was a 4-day session because of Good Friday, and the next week is gonna be quite an exciting week, because the mega banks, especially investors in those mega banks like JP Morgan, Goldman Sachs and Citigroup will have an exciting week, because they will be releasing their quarter 1 earnings report. Now apart from these results, we will have the economic data front, where the market will get the latest gauge of the US inflation, with Tuesday's closely watched consumer price index as well, and the producer price index as well, which I do suppose is going to be pretty high. But anyways, now the Bureau of Labor Statistics says that inflation unlikely to show any signs of abating as supply chain snarls continue to flare up the prices. So the Bureau of Labor Statistics says that they don't see any signs of inflation going down, and the supply chain issue is also not getting solved anytime soon. And of course with Russia's war, and which will influence the global energy and the commodities prices and the oil prices to go up much higher. So consensus economists anticipate headlines CPI will again accelerate to show an 8.4% year-over-year increase, which is higher than 7.9%, which was the previous result for the inflation percent. And this is quite huge, guys, above 8%. I mentioned this in my previous videos last year, that I do think that the inflation numbers will go above 8%, and this is what is happening. And let's see, the data will come out, but the consensus economist estimates is going to be higher than 8%. So they do think it's going to be higher than 8%, in fact 8.4%. The figure would mark another decade high rate of inflation, with the index even excluding volatile food and energy prices set to climb as much as 6.6%, up from February's 6.4%. So you can see that the commodities prices are supposed to increase as well, which is normal in such situations, and the oil prices for sure will also be higher. So the article further says that the newest CPI printout from the Fed is saying that they will of course act aggressively to fight inflation, which of course means raising the interest rates at a much higher rate. So we had the Fed meeting, and the Fed meeting minutes said that of course they will be shrinking down on unwinding the $9 trillion balance sheet, which is huge. And also from the Fed minutes of meeting, the conclusion came out that St. Louis Fed President James Bullard, who said he wanted the central bank to get to between 3% to 3.5% on the Fed funds rate in the second half of this year. So 3% is incredibly high, but like I said, guys, in my earlier videos as well, that this is the only way that they can fight such high inflation. And this is why this is the reason why I'm making this video, just a short update video, that you guys must be ready for the high volatility which is gonna come in the market. Now this high volatility doesn't mean that the market will be in this volatility range forever. No, this will eventually calm down, but the thing is that you have to be patient. Anyways, so let's see further. With prices increasing everywhere you look, and both consumers and business bracing for more, it is time for the Federal Reserve to take the gloves off and the Fed is now much more inclined to boost the interest rates by 1.5 percentage point at their meeting in May, and very possibly even beyond. Yeah, so if the inflation rate is going to be above 8% or 8.4% in one, then I then, like this article also says, that it could be a possibility that the Fed will come out again and will say that, okay, we need to hike up the interest rates even before than we decided. So inflation numbers are underway this week, not only on the consumer side but also from perspective of cost to producer supplying goods as well, which is the PPI index. Yeah, and Bloomberg, one of the Bloomberg economists, is expecting a reading of 10.6% year over year in the PPI index, which was 10% from last year, or I think January. So everything is increasing, as you can see. Yeah, and this is basically the article. Then it just talks about the bank's earnings, what to look out for, and this and that. So the conclusion from this is that the market in the coming months is going to be really volatile. Yeah, in a negative way, I would say, because first of all, such news, when it comes out, yeah, it creates a negative market sentiment, and that makes the retail investors, especially the new retail investors in the market who are entering every year, makes them more nervous, and that creates a sell-off. Now this creates a closed loop. Yeah, people get scared, the margins are triggered, sell off, margins triggered, sell off, margins triggered, sell off. So this is what has become a trend, let's say. Yeah, the market is on a sell off because of such negative sentiments and such news, but this is what we have to understand, that this is unavoidable. Yeah, this is the economy. The economy is struggling right now. The US economy is struggling right now. We're not talking about the Chinese economy. That's at a complete different stage. That's why diversification is the key here, guys, and patience. So you got to be patient enough to hold on your assets which you believe in. If you believe in a business, then you are going to hold onto it for a longer period of time. You should not be bothered about such volatility. In fact, if the market is falling down, then you should be more happy because you're getting your favorite business at a cheaper discount. So this is what you have to look in for, and this is what gives you a motivation. So if you are just looking into such news and you're highly demotivated, then think about your future. Think about the future cash flows. Yeah, when the market is giving such big discounts and the business is performing even better every year, then you are getting a much better valuation. What else you want? If you go out to buy a pen, and if you, on the website it said it's 10 euros, and you are going in the market and you found it for 5 euros, you are not sad about it, are you? You are not going to be sad about it, right? So that's what you have to think about. So this is what is the fundamental. Now, what I am doing in this situation, so I'm focusing on three things. One, the key businesses which I'm invested in, and the key businesses which I think are at a much better valuation now with respect to previous years. For example, I will give you some examples. For example, PayPal, yeah, Alibaba. Now, since all the FUD revolving around Chinese companies, the big Chinese companies, is over, I do think Alibaba is a really good investment, but that's just my personal opinion. So PayPal, Alibaba, let's say, apart from that, Block, the fintech businesses as well, they are getting a hard hit, of course, for now, but this gives us a better chance to invest in them. And I do have a list with me on the phone, but I don't want to go through all of them. So just to give you guys, so what I have put as an SIP plan. So yeah, Adobe. Yeah, Adobe is one of my favorite businesses, which is coming down below 400 euros. I'm talking in euros now. So Adobe, Alibaba, Alphabet, because Alphabet it's an evergreen business. Yeah, and especially before the split, in my sense. And also, I will not talk about deeper valuations for now, but these are the companies and the businesses which I'm keeping an eye on, and I'm buying them. So Alphabet, Berkshire Hathaway forever, Alibaba, Adobe, the energy businesses, Bloom Energy, which is much better in my opinion than Plug Power, than DraftKings, because DraftKings is not a more let's say value investment. Yeah, it's a growth business, but since it has been hit pretty hard, that's why I'm more focused, let's say, on some growth businesses as well. So DraftKings is in my portfolio as well. Then Fever International is one of the businesses which I'm really looking forward to for the next 5 to 10 years. Yeah, so Foot Locker, a good value investment. Then Stoneco is one of my big investments, because I do think that this is a super undervalued business, and there is a lot of fear surrounding this business which is not gonna last longer. So Stoneco, then Meta Platforms, Micron Technology, Nvidia, PayPal, like I said, Paramount Global, yeah, a Snowflake, SoFi. I am also trying to average down. My average is not so high, so SoFi is also kind of a cool business in my opinion. UPST, Tesla, and Zoom Video. So these are some of the businesses. I have a long list, but these are some of the businesses which I am focusing on. Now, this is the first factor, okay? Like I said, my favorite businesses. Second one is the dividend investment, because there are many businesses who are trading at a fair value, plus they are giving out to their investors rewards in the form of dividends. So you have a mature capital income, yeah, when you are investing in these businesses, plus you are getting an additional yield in the form of dividends. So that is increasing your year over year yield, and this is my second focus. So I will not go through the list of dividends which I have, but they are, because there are 49 dividend stocks which I'm invested in. So this is my second thing. And the third key factor is to find businesses, to invest into businesses who are capable of fighting inflation. That means they can pass over the cost to their consumers. For example, the utility businesses, everything which is dealing with consumers on day-to-day basis, they can pass on these costs to their consumers, yeah. So they have these contracts, the business contracts, that are hedged against inflation. So these are the three key factors which I'm focusing on during such economic crisis, and I'm not worried about anything. Yeah, I'm not worried about anything. I'm super confident on the investment which I've made, and I'm going to hold them forever. My patrons, and I'm supporting my patrons a lot on this, because there are many investors who are in my patrons group as well who are not now comfortable holding on to their stocks. They are more worried about them, so they shouldn't be, and I'm with them. And if anyone who is watching my video wants some kind of help, or I'm not a financial advisor, yeah, but I can share my knowledge. That's what I can do, and I can share my portfolio, so I can give some tips, yeah, as a friend, let's say. That's it. And I will try to help as much as I can to those who are really worried about their portfolios and who are panicking with their portfolios. Don't panic, please. And like I said, I'm there to help you guys out. This is it, guys. This was what I wanted to share with you, and I wanted to keep this video short. So I'll finish this video off with a message. Don't panic, be confident with your investments, and just think about long term. That's it. These three things. That's it, guys. That's all for this video. I'll see you in the next one. And just for the view, so that you can breathe in, breathe out, see the view, relax. And if you are more worried, just keep your phone or laptop aside. Don't look into your portfolios. Don't put any stop losses. Let it be. Yeah, investments and the indexes in the future will go up. They eventually do. Or just put in your money into ETFs if you don't want to cherry pick stocks, and if you're super worried. That's it. Okay, I can keep blabbering about this, but let's finish this off. I'll see you in the next one. Until then, stay safe, stay healthy, and ciao.